Good afternoon, everybody. It's February the 8th, and this is the full day recap. There are some real nuggets of information in here, and if I were you, I'll get your notepad out because there's a lot that we're going to cover here that will help you, right? Today was a very difficult day. It was very sloppy, but there were moments in here when you could have picked your trades, right? So what we're going to do is go through the day, starting with bias and then breaking the day down, right? So we started off the day with this huge range yesterday, and we were up around in this area, okay? So we know that by taking our fib across this range, right, we are in a massive premium of that range, okay? So we know that price likes to rebalance, so price likes to come down into a discount, right? You'll know from my AM session, I had a theory that we might run these equal highs on the hourly first before running down, however we never got there, right? So as soon as we saw this, we realised price was going to be running down into a discount. So how could we have, spotted this coming and taken those entries, right? So what we have here at, in the AM session is we have the daily gap, right? The daily gap. So this is the gap which formed yesterday, right? So at 6 p.m, right? And this is the daily gap. The pre-market created these equal highs, right? You see them here, 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 and here, right? And price ran up to it at 10:18 and purged those equal highs, right? However, it failed to stay above the daily gap. And we had this aggressive price leg down, right? As soon as we saw this and we saw price failing to get up above, we knew that there was a likelihood today was going to look bearish. Okay, and what was the next target? The next target was the weekly gap, right? The weekly gap. And so price had this aggressive price action down. We had a break of market structure, right? Break of market structure. So we purged equal highs. We break the market structure. We're waiting for price to retrace into a premium right before the leg down. What we notice is that we never get back up into a premium. So price fails continuously down, right? Until we get into this area here, which is balanced price range. And so this was the target, right? This is the target. So this is balanced price range. And what I mean by balanced price range is if we look at yesterday's action, you see this leg down, this leg up. This is balanced price. You see this fair value gap inside this leg, which is then rebalanced here. This is a balanced price range. So you can carry that through, and it acts as a support turn resistance, right? So price is likely to return into that as a draw on liquidity, right? As a drawback to it. So, if we go back to the 1 minute, for those who were on my Twitter and also saw the snapshots that I posted, this is a clear 3 drives pattern, right? ICT hasn't taught this publicly, but it's a 3 drives pattern, and this is an order block, right? So this one here is an order block. When price moves away, you get left with a fair value gap. You can take that as an entry, or you can wait to take an entry off the following order block, okay? And what we had here is a propulsion block. So a propulsion block is when an order block dips into the previous order block, and that forms the new order block, right? That's called a propulsion block. And then the entry could have been off the mean threshold of that order block, right, as your entry. And what was it doing? It was going to reprice this price leg, right? It was going to reprice this price leg back into the OTE zone. So that was a trade you could have taken, right? So if you didn't take this reject of the daily gap and miss all of this price leg, the other one you could have taken is consequential encroachment of the discount. So this is where it gets really technical, okay? So this is where you might want to take your notes on this one. So we have the purge of the buy side, we have a sweep, we have the fail, aggressive displacement, right? We have the break of the market structure, and we have a retracement that doesn't get up into this zone here, right? If we see price fail a second time to get back into this zone, what we can look at is equilibrium of the discount of that price leg. And that's your last entry to get in, right? It shows that the price is incredibly weak, incredibly heavy, right? So that could be your entry. If you see price failing to get back into a premium, you look at the equilibrium of the discount of the displacement leg. Now I know that's a lot of words, but that is a model in itself, okay? Now when we got down into this balanced price, we're looking for the reversal signs. And this is the reversal sign that I was talking about. You've got the 3 drives pattern, and then you've got the expansion, fair value gap left behind. This is always a risky one, a risky entry for me. I prefer to wait for the order block to form, or a propulsion block, and then take the entry off that. And then you get the expansion into the OT zone of this price leg. So let me show, I love this, by the way, this pattern, okay? And it's very, very strong. It's like a reclaimed order block, this 3 drives pattern. But if you take it in the wrong place, it will fail. So you can see you have the exact same technical here, right? You have the order block, it comes down, but it blows through it. Why is that the case? Because we're in a range, right? We're not at a discount. We're not at the bottom of a range. And you'll note that when this took place, it happened at equilibrium of the range. Okay, so we're likely to see a reversal here. It's a reversal indicator, not a mid-range trade indicator. Okay, so price was then very choppy during lunch. Okay, it was just messing with people up and down, left, right, and centre. Okay, ultimately it drew back up into the weekly gap before fading back down, again dropping back into this propulsion block numerous times. So if you're aware of this pattern, you could have continuously taken entries off this long, right? So I sent you all the screen grab in the Discord, so put it in your study journals because it is very, very strong. Anyway, price then breaks away and it leaves this balanced price range. Balanced price is again when a fair value gap is open and then it's traded back through, right? That's a balanced price range, and we trade all the way back up into, guess what? The median of the discount of the price leg in the AM session, right? Very technical day today, very, very technical. And so what we were looking at, we're looking at the 130 algo, right? After lunch, we like to see swing highs or swing lows get swept, right? What did we notice that happened before the 130 algo? It failed to sweep this high. So again, showing enormous weakness, right? We have, again, this 50% of the discount acting as almost like a resistance line, and it couldn't get above this high, right? Set after lunch. It failed it. And then we saw this aggressive displacement leg lower, okay? So the same principle applies on this leg, right? But now we're in a much deeper discount of the wider, of the hourly range, right? We're not above equilibrium now. We're down in at equilibrium, right? So price is more likely to go and rebalance, right? It's not as heavy as it was up here. So what did price do once it broke market structure? It chopped around and we found range. And we found range in this area for a number of reasons. You guys should all have on your charts the weekly open price and the monthly open price. This orange line represents the weekly open price, and below it we had this balanced price range. Okay, so yeah, this was acting as a form of support, and then we had the weekly open price just above it. So price chopped in around this range. However, we had the market structure break. Price eventually traded back up into the OTE zone of this leg. Okay, and at this point I was confident that the price was heavy today, right? And it was going to go and target a deeper discount inside of this balanced price range, right? It was going to target the lows of the day. Okay. I had my target, and I'll show you my trade in a second, to come back and retest, and I got out here at 26.75. I got back out on this order block, right? I got in at 42 and I got out down here, right? So this was your entry. This was your trade. You're waiting for a low risk entry, a fail to get above, and the 130 algo to sweep any highs. Below the equilibrium of the discount in the AM session. Heavy price, right? Failed to sweep it. Price displaced aggressively down, having a market structure break. Finding range inside a balanced price range and a weekly open price. Price expanded into a premium before dumping down to hit the lows, right? So price dropped down back into this balanced price range and traded back up into what we have here, which is a breaker block, right? So you'll notice that here it forms a breaker block, right? We go, it's a low, high, low, fail, retest, breaks through. This becomes a breaker, and then you have a failed breaker. Now it's acting as resistance, right? This breaker. So this, it trades back up into the breaker, into a volume imbalance. You see this volume imbalance? And that would have been your second entry down, if you were to have taken this trade, right? Now, let me just show you my trades, just so you know I'm not chatting absolute garbage. So let me just bring this in. So you can see I got in at 42, got in at 35, got back in at 34, got out at 29, and then yeah, I had a little scalp there, which wasn't anything special, right? So all in all, about 10 handles, yeah. So price hit that order block. So what do you do with this order block, right? I like to take it across the chart, right? Because I know it's a strong order block. This order block that I was talking about before, pre-lunch, right? You run it across. That is a strong order block. What did price bounce off of? That order block. That was your target, right? So you got in up here in the OTE zone of this leg after the break of market structure, right? That's your entry. Comes down, hits this order block, retraces back up into this fair value gap, right? And this breaker block, and then fails again aggressively, taking out the lows. All right. So look, there's a lot to cover in that, and there is a lot to cover there. And I know it's difficult because there's an equal high sat here, right? And you know, it feels like it's a bullseye, you know. And generally when we're bullish, we're like, yes, it is a bullseye. But you have to remember where we were on the hourly, right? In the hourly, we were in a deep premium of this leg, right? And so as soon as price wanted to move away, it's likely we were going to go into a deeper discount of this range, right? Out of a premium into a discount, especially as we'd swept these equal highs and it failed to get above, right? So the things to take away from this are, remember your displacement price legs. Whenever you get a break in market structure, look at your displacement leg, okay? And the ideal is for price to return back into an OTE zone, so that's above equilibrium before heading further down, right? After you've had a market structure break and you've swept the buy side and you've had a purge, right? However, if price is incredibly heavy and it's showing an unwillingness to move higher, you look at the equilibrium of the discount range, and that is your second entry, right? And then later in the day, post-lunch, if price is failing to get back above the high set during and after lunch, during their 1:30 algo, right? This is indication that price is heavy and that price is going to want to move down and tackle the lows of the day. And then you just look for a similar pattern, right, of market structure break, return into an OTE, right? You're looking for displacement, looking for return into an OTE, take your enter, take your trade, looking for a target. The target in this instance was the order block, right? So look, I hope you found that useful, and if you could do me a massive favour, if you found this useful, right, consider smashing the like button. It helps me out, helps the channel out, and it also helps other traders like you and I, develop. So I'd really appreciate if you could do that and spread the word. 'Cause I'm putting everything I know on paper and in these videos for you guys. So yeah, I greatly appreciate it. But yeah, anyway, until next time, take care of yourself and stay safe. Cheers, bye.